Good morning. Welcome to the B.F. Anderson Technical Report for July the 1st. We're doing the report early this week. As you know, July 4th, the market is closed half day on Wednesday and half day on Friday, so we went ahead and got the report out today. As you can see here, the NASDAQ continues to look good. We've got the lower moving average turning up. We had good volume on Friday, very, very healthy looking volume. I wouldn't be surprised if we're not rallying to new highs. A break above 8,000, 8,100 would be very interesting. Now, on a weekly basis, again, the news continues to be good. We've got the 35-week moving average turning up. We're above the 35-week moving average. Things look good there. Now, on the advanced decline line, we're getting a resumption of the uptrend. We are getting more net advancers than decliners. Does look like a bull market. Now on the high-low index, we reverse back up, looking healthy here as well. High-low on the new lows for the New York Stock Exchange, we only had 16 on Friday. Again, we're getting back below that 40, which is constructive. On the long-term graph, which is the 10-month versus 20-month, the index is well above both moving averages, and the upper moving average is starting to turn up. Everything looks constructive there. Now, again, back to your fear greed. We've got a tremendous amount of extreme fear up here recently. That's all reversed now. Now, remember, this is where institutions are buying puts or calls. When institutional investors get pessimistic and fearful, they're going to buy a lot of puts, but when they become optimistic, they're going to buy calls. Now, this is a contrarian indicator. Your window of opportunity comes when there's extreme fear, and we need to be somewhat cautious of pullbacks when we get into greed or extreme greed. Now, on this particular graph, this is the 200-week moving average, which stays in a very constructive uptrend. Again, as we've noticed in the past, every time we get close to the 200-week moving average, we tend to rally to new highs, which is exactly what's happening here. We pulled back here last year in December. We rallied to a new high. We pulled back in May, and we're now rallying to another new high. So very, very powerful. The geometric index, which is the equally weighted index, been moving sideways for an extended period of time. 2016, 2017, we broke out, made new highs, pulled back, made higher lows, continuing to make higher lows. Now we need to make a high or a breakout above 560 would be very constructive. The yield curve, just keeping an eye on this. Don't really weigh it as a tremendous indicator, but it is saying that we are not inverting. The yield curve is not inverting. According to the 2-year bond versus the 10-year bond, the government bond, interest rates are low, but we're not getting an inversion. This is important for the banking industry primarily. The global Dow, we see that the international stocks are starting to firm up. We've broken out of a long base here, rallied to a new high, very similar to the value line geometric. Now, I want to take a minute and talk about small caps. I went to a webinar over the weekend where a lot of the discussion had to do with, are things like the small caps, the transportation stocks, and the bank stocks, do they tend to indicate, or is there a way to use them to measure the overall market? Well, as we can see here with the small caps, they've been underperforming. We're back above the 200-day, but the 200-day is moving down. But the interesting thing about the study, and I want to just jump to this. So we have to ask the question, do small caps have a high correlation to the S&P, or can this be a false signal? Now, this also applies to the transportation stocks as well as the banking stocks. So as an example, if we take 1994, and what I've got here is the S&P 500 compared to the Russell 2000, which is the large cap S&P 500 compared to the small cap Russell 2000. You can see here when the line is going up, the S&P is doing better than the Russell 2000. So from 1994 till the end of 99, you can see here that the S&P far outperformed the Russell. So the correlation doesn't seem to be as important as I originally thought. So I'm changing my mind on this. I'm not going to be paying as much attention to the small caps or the banks or the transports. There really is very little correlation. In this time period, 94 to 99, the S&P climbed 215%. The NASDAQ climbed 424%, but the small caps only climbed 95%. So since 1950, there has been very little correlation with the small caps to the overall market. Like I say, this also applies to the transportation stocks and the bank stocks. I'm reaching the conclusion that the small caps are really not that important of an indicator. Now, this was another interesting part of the study that was also discussed in the webinar. And it basically says that going back in time, that when you get a golden cross in the 30-day moving average, crossing above the 40-day moving average, on average, 5 years later, the S&P 500 is up 72%. So basically, we're getting a golden cross on a time-tested moving average crossover. Now, let's just take a quick look at the top 5. We are seeing a lot of rotation in the market right now. A lot of the old names are starting to fade, and some new names are coming on board. This is Advanced Micro Tech, which is semiconductors. This is Enphase. I'm finding it very interesting right now. We just took a position in a solar stock. Now, go figure, with all the controversy about solar. But this is a company called Enphase Energy, and they make a very high-tech inverter, which takes the signal of the energy from the solar and converts it to usable energy. This is a company called Innovative Industrial Properties. Again, you can see it has been in a strong uptrend. This is Shopify. This is one of the stocks, though, that we recently sold, mainly because it has been incredibly strong for an extended period of time. And then we had what we call a break of the trend, and actually what we would call a violation of the trend. We want to keep an eye on this one, but for now I would not take a position. Now, this is Snap, which is internet. And you can see here also in an uptrend, however, breaking below the 10-day moving average. So bottom line is, everybody have a good 4th of July. Things really do look good for the indexes. I mentioned the small caps, but I do want to mention also we do look at 5 indexes, of which the small caps and the mid caps are the only ones underperforming. But they can play catch up, and that's really what I think is going on. Thank you very much.